Joel, I'm going to start with you. We have seen so much volatility. The tech stocks just bouncing back today. Apple up 4.5%, Tesla up nearly 6%. It sounds like you're really focused on this disconnect between what's happening in tech and what's happening in the rest of the market. What are you seeing here?
Yeah, I mean, I think the sell-off that we've seen, obviously you highlighted the bounce we have today, but it just provided us some evidence and confirmation that the recent move in tech, specifically in August, really got untethered from fundamentals under the hood. Whether it's elevated option activities that have obviously faded over the past kind of week or so. But I think tech, clearly it's the poster child for growth and momentum. Coming out of COVID, we've seen trends only accelerate. Whether it's digital transformations, shift to the cloud, rise of e-commerce. Video games obviously have been exploding as well. So tech's clearly the market leader, and I think it's been healthy. But a lot of the guys I talk to, there's been no sense of panic, and a lot of it does feel like broad-based de-risking more than anything as well. And you look at a day like Tuesday, even energy financials got carried out as well. So it wasn't just an exodus out of tech specifically. And it does feel like guys are going into performance protection mode with the election just less than 2 months out.
David, do you agree? How should investors take that 3-day sell-off? Is it a warning?
That's it. We don't think that the bubble has burst, but we do think that investors want to look at that and understand that when the tech bubble does burst and when it does go down, it's going to come out of nowhere and it's going to be very swift. You saw a lot of companies sell off 20% very quickly. They're rebounding some today. But the key is look at that as a warning. We don't think the bubble's bursting now, but if you have companies that are selling above 50 or 70 or 100 times earnings when they're rallying, you want to be taking money off the table rather than plowing money into that rally.
Yeah, I guess it makes sense. Maybe stocks that go up for no fundamental reason will come down for no fundamental reason. Joel, I wonder about the product launches we're about to see. We've got pricing on a couple of different models for Microsoft's Xbox. That's not just a product, it's also a platform for games that are going to follow. Interesting that they've got this financing plan that's also connected to their services. Apple's been pushing on financing plans as well for the iPhone. Given how low interest rates are, do you expect those kinds of financing plans to be important for a holiday?
I mean, it hasn't really come up in too many conversations I've had, but it's clearly they're trying to go after and attract consumers that maybe don't have the financial means to kind of buy things up front. So they're trying to be a little bit more creative to kind of increase their TAM a little bit and kind of reach more consumers. But yeah, I mean, so far it's like, we have the Apple event on September 15th. You mentioned Xbox and Sony are both launching their new consoles in November. So there's a clear awareness out there from these tech players that a lot of people in the economy are struggling. And unfortunately, it's kind of at the lower end, especially those in the service industry. So they're trying to kind of not alienate that part of the market. And it makes sense to be a little bit more creative in how they kind of can reach those people.
Given that, David Katz, is the market over-reliant on a consumer that's so stretched, or are these types of moves, marketing-wise, financing-wise, to move product going to come through once again?
We think it makes sense. We think it will come through once again. And speaking with banks, a lot of them have mentioned that they think consumer balances in the bank accounts are higher today than we went into the COVID crisis. So the government bailout is actually working in a fairly meaningful way. People have money. So we do think if there's any sort of light at the end of the tunnel with COVID and people feel that the economy is going to be getting better next year, they will continue spending. In the meantime, plans that you're talking about will help them get through that gap.